What's up, YouTube? It's your boy Eddie the Hustler. Today, I want to drop some insight on why you should be investing in the stock market, right? Stocks are one of my favorite asset classes. I think they should be a part of everyone's portfolio. It don't matter how much you're making. If you have a 401k, you're basically investing in the stock market already, right? But when it comes to investing in the stocks, I think it should be a part of everyone's financial plan. And, I put some articles together to show you guys the data. And hopefully, this gives you a little bit more insight on why you should, if you're kind of like on the edge, or if you feel like, oh, stocks are too risky, like I don't want to do it. Um, Hopefully, I answer some of your questions. And all these articles, I'm going to drop them in the description for you guys to reference and take a look at. So let's get right into this first article before I go into the data from Chase. So I found this article right here. This article was actually published by Fortune magazine, but I needed to have a fucking subscription. So what I did is I did some more digging and I found it on this website, right? Because, hey, I'm trying to save that money. I'm not going to pay for no fucking subscription just for this video. But this right here has all the information, right? So how to invest like the 1%. And, right here, boom, here's a piece I wrote for Fortune about how the top 1% invest their money in the US. So check it out. So if we look at this chart right here, the top 1% owns more than half of the stocks in the US, right? And this is a little bit outdated. This is as of 2023. But if we look at the top 1% of households in the US, they own 53.5% of stocks compared to everybody else, right? 53.5% of the top 1%, the wealthiest motherfuckers in the US, they have their money in stocks, right? And I know a lot of people, talk about the benefits of real estate, and real estate is a good asset class. You should invest in both. I'm not saying, only do stocks, right? But if we look down right here, look, the top 1% of households only own 14.3% of real estate. Right? That's a big difference. So the top 1%, they own 14.3% in real estate, and they have 53.5% in stocks. Right? That should be a sign right there. Like, dang, all these rich motherfuckers, they're putting their money into stocks. You should be doing the same thing too. Right? The good thing about stocks is that, it's liquid. What I mean by liquid is that you could cash it out compared to like a house, right? Real estate, you can't pull that money out. It's like, oh, my house is worth $1 million. But if you needed that money right now, you can't just be like, oh, give me $1 million for my house, right? There's a whole process with the stocks. The brokerage firms, they offer you like a debit card, so you could sell it and boom and use it right then and there. So again, if the top 1% in America are investing in stocks, there shouldn't be a reason why you aren't, right? The rich are only going to get richer. And as inflation, right, the value of your dollar goes down, the cost of things are going to go up, and so are assets. That's why the top 1% own stocks. And then when you own a stock, you're owning an actual piece of a business, a company. You know what I mean? So now moving on to the data, I pulled this data from JP Morgan Asset Management. This information is public, right? Again, I'll put it all in the description for you guys to check it out. So all this information here has been updated as of January 31st. And let's get right into it. So let's just look at some of the charts and some of the analytics that they provide. So again, talking about asset classes, right? Stocks are my favorite asset class, like I mentioned earlier. And we just learned that the top 1% have 53% of their wealth in stocks, right? And then if we look at this chart from 2009 to 2023, if we look at the top 3 asset classes, what are they? Stocks. Large cap, this is the S&P 500. Small cap, that's the Russell 2000. REITs, real estate investment trusts, these are real estate equities or stocks, right? These top three asset classes, you can invest in these through the stock market. If we look from 2009 to 2023, what are the top performing asset classes? The ones that generated the most returns? Stocks. EM equity, that's emerging markets stocks. So like investing into developing countries. Again, REITs, small cap stocks, REITs, small cap stocks. There was only 2 years where stocks didn't perform the best, right? In 2018, 1.8%, that was cash. And then in 2022, we actually had commodities at up 16.1%. But again, overall, throughout that whole time period, stocks are the ones performing the best. And you see, this is why the top 1% own 53% of stocks, right? Because they understand that stocks typically perform well over the long term. Now, when it comes to that, again, we want to have a long-term mentality when it comes to investing. So if we look at this chart right here, right? So from 1950 to 2023, over a 20-year period, what performs the best? We have stocks, we have bonds, and then this is like a 60-40 portfolio, meaning like 60% stocks, 40% bonds. But if we look at 100,000 being invested over 20 years, stocks, you have a return of about 11.2%. And that's if you hold within 20 years. Right now, I'm not saying stocks are, a straight line, because anything in life isn't a straight line. You're going to have ups and you're going to have downs. But the longer you stay with it, the better returns you can get, right? So just looking at this chart. So in 1 year with stocks, you could be up 47%. But on the flip side, you could also be down negative 39%. Now, let's say you're holding it for 5 years. That 39% drops to negative 3%, right? You could be down negative 3%, but you could also be up 28%. So you can fall in this range. And as you can see, look, if you hold it for 20 years, the lowest you could go is about 6%, right? The highest you could go is about 17%, which is what we want right here. See, the average is about 11.2%. And that's what we want. We want consistent growth with our money. And stocks gives you that return. Now, another thing too that I was looking into is, the taxes when it comes to investing in stocks, which I think is another undervalued aspect or overlooked part of investing in the stock market. The tax law favors investors. And let me show you why. So if you hold a stock for a year or more, the tax rate changes, right? It's called capital gains tax. And the most that you can get taxed is 20% based on your annual income. It's 20%, right? And these are the thresholds for your income. So let's say you're single and you make 70,000 annual income, right? You'll be taxed at 15%. And I was kind of playing with this calculator, but let me show you. So your capital gains tax, right? Let's say let's say right here you made let's say you make 20,000 in capital gains, right? So you bought some stock and then after a year you sold it, made 20 bands, and then you make 50,000 from your job. You have a W-2. This 20,000, the taxes that you're gonna have to pay is right here, $3,000. Right, 3,000. Now, if we look at the your tax bracket, right, on the most that you can get taxed when it comes to personal income taxes is about 37%. That's a big difference, right? The max here is 20. So if we look at, the taxable income here, it's based on levels, right? So each portion of your money that you make gets taxed at different levels, right? So let's say someone here, they make, what did we say? 50,000. Yeah. So they make 50,000, right? So they're going to be in this bracket here. So look, they're already paying 5,147 plus 22% of whatever's over that 45, which is going to be like what? Let's do the math. Let me pull up a calculator. So they make, so 44,726 minus the 50,000, right? So this right here is going to be taxed at the 22% rate, which is another 1,000. So we get that 1,160 plus the 5,147. You're paying about $6,300 for your taxes just based off that 50,000 that you made. And let's say, just to see what it'll be right here, let's just say you just made 50,000 in capital gains tax and you have nothing in W-2. Everything's from, your stock portfolio. That's how you look at this. 806 compared to the 6,000. That's a big ass difference when it comes to investing. Again, you want to hold for the long term. Again, capital gains tax only occurs when you invest or when you sell an asset or the stock after holding it for a year. So if you hold it for a year and 1 day and sell it, it'll hit this capital gain tax, right? So that's another reason why you want to invest. The tax law favors investors, right? They want you to invest in companies. Why? Because, it stimulates the economy. If businesses are doing well, their share prices are doing well, they're creating more jobs, right? They're more profitable. Investors want to invest in that company a lot more. It's easier for them to get funding to, fund different projects, provide more jobs, things like that, right? So it's going to help the economy in the long run. So again, right, if back to the example, you actually pay more taxes in your W-2s, right, in your earned income. Capital gains taxes is a lot less. Hopefully this made sense. I know I didn't get into it too much, but if you have questions, you want me to deep dive into this a little bit more, let me know. But I hope this information helped you out a little bit or gave you a little bit more insight as far as why you should invest in the stock market. Right? The stock market is a wealth building machine. And again, the top 1%, they understand this. That's why, they own 53.5% of stocks. We just saw the tax advantages, especially if you hold for more than a year and then sell, you'll pay less taxes on that money that you make. So to recap, the top 1%, they have 53.5% of their wealth in stocks. And right here, stocks are the asset class that historically has the highest long-term returns, right? They have historically the highest long-term returns. And then if we look at this chart right here, again, over the past 20 years, from 1950 to 2023, stocks have returned about 11.2% on average, 11.2%. And then again, over the years, the top 3 performing asset classes, 2009 to 2023, are stocks. So that's some research, some insight that, I pulled for you guys. Let me know if you guys like this style of videos. I'll be sure to do more. Let me know if you guys are rocking with this video, and then I'll put all the data in the description. That way you guys could check it out if you want to. But hopefully this gives you a little bit more insight on why you should invest. I mean, the numbers are there, and hopefully that gets you to invest in stocks. And if you're like, dang, I want to invest, I have a video that I did that you should check out. It's called Stock Market for Beginners 2024. I'll have that video on the screen. I'll have that video link as well. That way you guys could check it out if you do want to get into the stock market. Don't forget to follow me on Instagram, TikTok, and subscribe to the channel. I'm all about sharing my financial journey, what I'm learning, and hopefully, getting you more comfortable talking about money and getting your financial positions in check. So with that being said, I'll catch you guys on the next video. Stay hustling, stay investing.